Hey guys, welcome back to another video. So today we're going to do another video on exercisement of a call option. Now I did a video before on the Robinhood platform and I did the video just to show you guys how to do it. Not that I'm recommending you guys to exercise the option. Now when you buy a call option, you have two choices. Choice number one, you trade the option back, or meaning sell it back to the market for profit, if any. Otherwise, it's going to expire worthless. Or choice number two, which is exercise the option. So we're going to focus more on choice number two. Now, I'll give you my opinion, up front. I think, in my opinion, a lot of traders simply go with choice number one. But I'm going to walk you through the exercisement process and then you can decide whether or not it makes sense to you. Some people like to exercise the option. I like to just do choice number one, trade the option back, sell it back to the market and get it over with, take my gains in and out, right? No need to invest more money. Now, what is a call option? A call option is a contract that gives an investor the right but not the obligation to buy a certain amount of shares. Remember, it's 100 shares per contract that the call option is representing. It doesn't mean you're going to get 100 shares for free. That's only if you exercise the option. But to exercise, you need money in your account. And like I said, I'm going to walk you through the steps right now. So it's a specified price, and they're talking about the strike price that you're going to pick when you're buying a call option. And at a later time, they're talking about the expiration date that you also pick. And you can always buy out of the money, at the money, or in the money calls. And depending on how much time you give yourself, yes, sometimes you can even exercise the option. Let's say the price of the stock goes up to $100. You bought a call option with an expiration date, let's say, of 2 years. And now you can buy the stock at around maybe $10 or so, right? Then you can decide on whether, to exercise the option or just take the profits on the contract. So everything changes within time. Now, I'm just giving you a simple, basic example on how exercising a call option may not be the best choice. Now, this is, again, just my opinion, just to share with you guys the strategy on how this works. To exercise the option, you're going to require more capital. So there you go. You need more money, another investment, right? Because you need to buy 100 shares of the stock at the strike price that you picked. Now, you're also going to need for the price of the stock to be past your break-even price. Why? Remember, you paid premium in order to be able to do this, which is exercise the option. And I'm going to walk you through the math on that as well. Now, the other simple one, which is the one I recommend in my opinion, is to simply trade the option back, get it over with, take your profits, no need to invest any more money. You simply invested a small investment, unlimited gains, and the most money that you can lose when you buy a call option is the money you paid in premium, the money you paid for that call option, basically. All right, guys, and this is very important. Just keep in mind that if you let the option expire, and that call option ends up being in the money on the last day of expiration, meaning the strike price is below what the price of the stock closes at on the last day, and assuming you have the funds in your account to buy 100 shares of the stock at the strike price, assuming all those things are in place and you're letting it expire, then that call option will exercise automatically. Now, you don't want that to happen. A call option can be in the money even by just a few cents. So if the strike price was $15 and on the last day of expiration, the price of the stock closes at $15.10, even by a few cents, it's already in the money. Now, I'm going to give you an example here with a play on American Airlines to paint you a better picture, give you a better example, and show you how it works and how it would look. Now, let me give you the play here with American Airlines, and this is just, assuming you did this play, okay? So you bought a $15 strike price call option that expires December 18th. You paid $50 in premium for it. So your investment so far, it's only $50. Now, you did this play right when American Airlines was trending at $13.85. That's when you bought that call option. Now, as you can see, American Airlines ended up going even higher, almost $17 per share. And let's assume you ended up taking profits right here on that call option. Now, when you buy a call option, you don't necessarily have to hold until expiration. Time is one of your best friends when it comes to call options. You're giving yourself time for the price of the stock to move in your favor, of course. So time is going to be one of your best friends. Doesn't mean that you have to hold it until expiration, because these gains can easily get wiped out real fast just as well. So it's your job to take profits whenever you feel like it. So it's just a matter of time, basically. If you give yourself like a year, then you have a whole year for the price of the stock to keep moving up and up and up, right? So it's just a matter of when you want to take profits. Now, let's say you ended up taking profits on that call option right around here. So these are numbers actually from Friday, okay? So December 18th was the expiration. Now it's not showing me the $15 strike price, but the $15.50 strike price on Friday was worth around $150. If you would have sold that, you would have gotten around $150. Now a $15 strike price would have been worth, let's say, around 200 bucks, right? Let's say it was worth 200 bucks. So your $50 investment right there, you would have more than doubled your money right there if you would have just simply sold the contract. Now, let's say you decide to exercise the call option, right? Instead of just simply taking the $150 profit on that. Now, let's say you went with the exercisement. So this is how the exercisement would look. If you exercise the option, you're saying you're willing to buy 100 shares of the stock at $15, which was the strike price that you picked. Now, in order for you to do that, you're going to have to come up with $1,500. So that's another investment of $1,500. Now, either after hours or on Monday, because most options expire on a Friday. So by after hours on Friday or by Monday, you're going to see in your account that you have 100 shares of the stock, and you are going to see capital gains on it. In this case, it'd be 140, because remember, we're using the numbers from Friday just to give you an example. So on Friday, it closed at $16.40, American Airlines. So you might see something like that you have 100 shares, and now you have capital gains of 140, but remember, you invested another $1,500. Now, remember also, you paid $50 in order for you to even exercise the option. The $50 was to buy the call option. So technically, you're only up $90 in this case. Now, you can see the big difference. In the other example, if you would have simply sold the contract back, you would have been up $150. If you would have sold it, let's say, for $200, right? Or even $150. Your gains would have been a lot more than simply exercising the option, and with a smaller investment. Now, a lot of people like to exercise the option. I mean, I've done videos on it, but simply to show you how to do it and how it works. But in my opinion, I think it's just better to sell the option back, close the position, and move on to another trade. Now, I don't know, maybe some people just like exercising for some reason. They have a different play in mind. They want to hold on to the shares. But if you were looking to buy the shares, now this is just my opinion again. If you were looking to buy the shares, from the beginning, I would have simply sold a put option on the stock instead of buying call options. Put options is another way to kind of, get paid to buy a stock that you're willing to hold anyway. So this is all for this video, guys. I hope I kind of clear some things up for you guys. If you guys have any questions whatsoever, just feel free to leave a comment down below. And until then, I'll see you guys on the next video.